Hey, it's Pete Krull, and we are back with another episode of Dollars and Change, the expert's guide to sustainable and responsible investing. And we are here today in Washington, D.C. We are at the US SIF, the Sustainable Investment Forum's annual conference. And so I'm getting to interact with a whole bunch of cool people. And today we have Mark Hayes. Mark is the Director of Sustainability, is that correct?
Director of Sustainable Investing.
Director of Sustainable Investing at Glenmede in Philadelphia. So welcome to the podcast.
Thanks for having me.
Absolutely. So you've been in this role for a while.
I have.
Tell me a little bit about your background. How did you get to this place?
Sure. Well, it's a windy path, as I think your listeners will know is the case for a lot of sustainable investing leaders like ourselves. I spent about 7 years in what I would call traditional and alternative investment coming out of school. So I didn't know what sort of investment I wanted to do, so I tried all of them. I invested in equities and fixed income and hedge funds and private equity, mostly at Cambridge Associates.
Okay, that's what I was going to ask.
I'm actually here in DC, so it's kind of a little bit of a homecoming to be back.
Nice.
Yep.
Nice.
So that's where I started, and what I would say is, call it 4 or 5 years into just learning about all different types of investments, I got the opportunity to work on a private equity deal, South Africa focused on off-grid solar.
Okay.
And for the very first time, I actually, instead of just seeing one number in the first report I got back after the investment, which was the IRR, which is very good, I saw a second number, and it was number of individuals given affordable electricity for the first time. And for me, it was an aha moment, both from the rewarding aspect of it and how I felt about what I had done from an investment perspective, but frankly, the opportunity set. And that was, 11, 12 years ago now, where we were just starting to understand this idea that, well, look, maybe you could produce impact and also produce returns alongside it. Ever since I've been kind of chasing that first investment.
So sort of a light went off.
It did.
With you when you saw this, when you saw that, investing in a sustainable manner also produced an actual rate of return.
Yes. And you know what it is? Because before that, frankly, and this is including Cambridge Associates, and nothing against Cambridge, everyone was operating this way.
Right.
But the approach at the time was mainly around this idea of just excluding out the bad stuff out of your portfolio. And look, modern portfolio theory suggests that as you exclude more and more stocks in your portfolio, you're less likely to outperform. I've never been really that interested in that concept per se. I understand it. Some clients want it. They still want it today. I've always been much more interested and just philosophically believe that if you invest in companies with a strong, sustainable business advantage by solving problems related to environment, climate change, solving problems around society, those companies can be more profitable, again, if they're applying that correctly. So that's always been my philosophy.
Well, and I think that there's an aspect of this that a lot of people miss. So when I started in this business 27 years ago, back with Merrill Lynch, we looked at investing as long-term. We looked at investing as something that was 5, 10, 20 years out. And the more data we get, the more the speed that data is coming to us, that length of time has shrunk and shrunk and shrunk and shrunk. So we've gone from long-term investors to short-term speculators.
Right.
And, related to what you're talking about, I think it's important that, one of the things that I've learned with sustainable clients is that they see the long term. They see that we are focused on a paradigm shift here.
Sure.
And I think that's an opportunity to move away from this "what have you done for me lately" mentality to how can we invest in making change long term.
These are mega trends also when you think about climate resiliency and around the risks and opportunities that will be created and afforded by companies that are thinking about these solutions. Again, it's a mega trend just along a number of others that we could talk about, from AI to robotics. Climate is one of those, and I think that's important to encapsulate this space in that term.
And I want to get into that in just a moment, but I want to hear about your journey, though, from the light going off that, hey, I can do, solar and not only make a good return, but also have an impact on people, to, Glenmede, to where you are now.
I wanted to do it full time, and I wanted to do it right away. Nobody knew what I was talking about in the US. They're like, what is this? Is this philanthropy? Like, is this, and I said, no, it's not. It's this really emerging field.
And what year was this?
This was 2013.
Okay.
And I spent a couple more years trying to get involved with different deals, and just there wasn't enough to do. And a mentor of mine at the time said, look, go to Europe, go to a school that has a whole program around this. Europe has been leading in this field for a really long time. I talked to my girlfriend, now wife, and said, hey, how about we spend a couple of years living abroad, before we have kids, anything like that? And luckily she said yes. I went to London Business School for an MBA, and the whole second year of London Business School was studying this space. Their whole program was this. And what was cool about it was it gave me a crash course in all of the different ways to, I would say, try to create value through environmental, social, and information. Yeah. So I learned about ESG integration, some of the earlier papers that were linking ESG factors to financial materiality. Right. I learned about true impact investing, kind of that classic place-based, highly localized CDFI type market. Yep. It gave me a lens around all the different ways I could get into the field, and then helped me kind of choose into what I ended up choosing into. I joined a firm called Flat World Partners right out of school, one of the early movers in this space. Think of them as a mini Cambridge Associates, but totally focused on impact. So I led their manager research group, really designing some of the early frameworks around how to assess what's real and what's not in this space when you see impact or ESG or sustainable in the label. Right. I then from there joined JP Morgan as their first ever US sustainable investing person, which was an amazing opportunity. Another one that was funny that I joined, and people were really confused there. They were like, that's your whole job? That's all you're doing all day? Do you have enough to do? I remember them asking me. And this is now 2017. And that's when all of a sudden almost it just took off. Yep. And suddenly we were really busy, and I was flying all over the place, educating huge swaths of advisors around how to talk about this new thing and really what to look for. And that brings us to today.
Right. And I mean, that's a big part of both of our jobs is the educational component of it, right?
Huge.
But I did want to tell the joke that popped in my head when you said you had to go to Europe to learn this. Is, what's the, how do Europeans, what do Europeans call sustainable investing?
Yeah, what is it?
Investing.
Good point, yeah. Exactly. Right? Yeah, I mean,
because
it's true.
They understand. They've integrated it into their processes because they understand that it is not woke investing. It is not all these derogatory terms that have been placed on it.
Correct.
But it's just enhanced due diligence.
Exactly. And I think that was why it was a really good place to learn, because there were decades of do's and don'ts around navigating this space. Now, of course, now a lot of the U.S. institutions have terrific programs too. But still, I really am grateful for that period and all what I learned from a lot of different large asset owners and large asset managers over there.
Well, and I think, one of the pieces that I read in the last couple of weeks here, and of course, this is the end of June when we're recording this, just to give folks some perspective, was that, despite the political headwinds that we're facing, most large asset managers are still using environmental, social, and governance factors. They're just not advertising it. It's this new term, green hushing, right?
Yes, I've seen a lot of that, actually. And that's exactly right. And I think, as investors, as we're thinking through what that means, the power is in the data that you have. Right. And in some cases, the direct dialogue or conversations you're having with company management, or if you're investing in a third-party strategy, really understanding from them exactly what they're doing and are they still doing it. So that's really the key here.
Absolutely. And they've made it a core component of their process. Yeah. Right?
Yeah.
And doesn't really matter what any politician says. The idea that, this is, we take this seriously. We're a fiduciary. We want to make sure that when I decide I'm going to buy company A, that I'm not going to see some environmental risk come out of left field.
Sure.
That is going to come and bite me in the ass.
Yeah, no, you're totally right. And what I would say just broadly in this environment is that I really have not seen very many companies pull back in terms of the actual work they're doing around climate resiliency, around diversity, equity, and inclusion. Yeah. The ones that have, tend to be public about it. So it's almost they want it to be known that they're pulling back. The vast majority, though, are still doing the work because they believe and see it as financially material, frankly.
Yeah. Well, and it's not just they believe it. They've seen it play out.
Well, sure. Yeah.
The evidence is there.
Exactly. Yeah. It's a very good point.
So I want to talk about thematics. I think that thematics in our business is really important. I think you and I have a lot of similarities in our belief system. Yeah. When I put together a portfolio, just say a generic, balanced portfolio of mutual funds, ETFs, etc.
Yes.
We'll have our core of modern portfolio theory funds. Sure. But bolted onto that, we're going to have the thematics. Yes. We're going to have infrastructure. We're going to have water. We're going to have energy transition. And we also use biotech. I'm a strong believer that a healthier society is going to be a more sustainable society.
Right.
So talk to me a little bit about your belief system when it comes to the thematics. What thematics do you see as being, sort of leading the charge going forward?
And very similar approach on our end, just so you know, in terms of our core approach, broad-based sustainability, but then complemented by some really focused, targeted thematic strategies.
Yep.
I think this is a really exciting area, honestly, right now, particularly around where we see opportunities to really hone in, not just on a theme like climate. That would be what I would probably tell you 2 to 3 years ago. Climate is a theme.
Exactly.
I'm actually looking one layer down and looking within climate. And I'll tell you a few we're focusing our time on right now. One is energy resilience. This idea that, look, with AI, with population growth, we're going to need an enormous amount of energy going forward. And frankly, we do not have enough to have a resilient grid here in the US.
Right.
We are a believer that a big part of that mix is renewable energy. A big part is nuclear energy, and a big part is natural gas. So there's a little bit of a pragmatic view here we're having on our end too, that, look, natural gas is not totally clean, but is a lot cleaner than the existing grid is today. So that's one theme we're spending a lot of time on. A second one I would say is agricultural technology. This idea that, look, in a world with less arable land, with less fresh water available, with increased droughts, we need more efficiency, we need better technology to ensure that we can increase the yield per square meter of land that we have left.
Great.
So that's two. And the third one I'll give you is very relevant and very timely, which is circular economy, which of course listeners know, fancy word for reuse and recycle.
Right.
But in a trade constrained world, here in the US particularly, we're looking at how companies that previously relied on more global supply chains, how they're looking more domestically to be able to reuse and recycle those inputs, which could give them an edge. So, companies that you could look up just publicly have been very strong on circular economy and their approach. Ford, Nike, these are big global companies that are already invested here. So that's something we're thinking through again that's super timely even in the last few months.
Yeah, that's interesting because 21 years ago when I started this firm, I spent, let's say 6 months before that, I spent an afternoon with Bill McDonough.
Ah, yeah.
Sure. He wrote the book Cradle to Cradle, which is, it's the tome, if you will, for circular economies.
Yeah.
And it's one of those aspects of business that just makes sense. When you've got a cell phone or you've got some other kind of electronics, especially it's something that has rare earths or anything like that.
Yeah.
Why would you just dump that resource and have to dig up more?
Sure.
Let's not only and Bill would talk about design. So it's not just about being able to recycle a product. It starts at the original design of the product, so that way it can be deconstructed in a way that's simple, that's safe, and that things can not necessarily be recycled, but can even be upcycled.
Yeah.
In the
it's a really good
long
way
run.
to say it.
Yeah.
So those are three themes I'm seeing. I don't want to leave out the S in ESG, and just to name one, again, very timely, but we've spent a lot of time over the last few years defining what makes a quality job. So looking at proxies for quality jobs and what helps retain and attract, top talent. Diversity is one of those components.
Right.
But so is a really strong healthcare, work-life balance, different benefit programs, employee resource groups, finding proxies for that. We're spending time now on what we're calling the reshoring of quality jobs in the US. This idea that if there's going to be more skilled labor jobs here in the US, isn't there differentiation around companies trying to attract that talent amongst each other? So just didn't want to leave out the social side because, again, that's still an area of interest and a lot to do there.
Of course it is. And, it's... I think we focus a ton on sustainability, and we're out there saying that is really where our interest lies.
Yeah.
But there are so many other aspects of it. I mean, there's a lot of folks, for example, who won't buy Tesla because
great example.
They've got the street cred when it comes to being the first mover or one of the big movers in EVs, batteries, solar. But how do they treat their employees?
100%. Right. So we try to always have, even on our environmental strategies, have a lens linked to financial materiality on other factors. Because again, you don't want to invest in a company that may be great on the environment, But if there's really negative financially material issues across the S&G,
Right.
it doesn't make any sense as an investment. So I think we have to encapsulate those.
So I want to come around to infrastructure and resilience a little bit, because that's a big interest of mine, as we've talked about in the past. What sub themes, if you will, under resilience are you looking at that you think are really interesting?
Yeah, I mean, under resilience broadly, again, I would categorize this as climate resilience. We're thinking about a couple different ways to play the energy transition. So there's kind of your classic real assets approach,
right,
which is solar infrastructure and wind infrastructure. I would say for us, we are increasingly investing globally and actually reducing our U.S. exposure in favor of Europe and Asia.
Yeah, a lot of us are.
Given the policies that we have seen, it just makes good sense over the next several years to expect Europe and Asia to step up where the U.S. is pulling back.
Right.
I will say, though, within this category that within the U.S., we are investing in nuclear at an increased amount. In the Big Beautiful Bill, again, we're recording this in late June, so we'll see how that pans out. But at this moment, nuclear credits are right involved in that bill and have bipartisan support on there. Yeah. We just saw the first permitting get approved in Tennessee, actually, a couple of weeks ago. So we do think nuclear is not the silver bullet, but can be a big part of the solution. The other comment I would make outside just hardcore energy, I would say, is this idea of energy efficiency and battery storage. I think that's really, really critical to think about here. To unlock all of those really exciting technologies that I just talked about, you have to have a better battery storage system here. You have to have better energy efficiency systems, including AI-enabled energy efficiency systems. Absolutely. AI, of course, is going to be generating a lot of electricity need, right? Yeah. But at the same time, AI can be part of the solution. It's a good way to sum up AI. There's pros and cons. But AI can be part of the solution here on load management and energy efficiency. So we're investing there as well.
And there's a lot of cool technologies in long duration energy storage that aren't just like your traditional, you're thinking about lithium or whatever it is.
Yeah.
There's gravity. There's like really basic strategies, pumped water, things like that.
Yeah.
That are a big opportunity where we don't have to invest a bunch of money in rare earth minerals or try to get stuff, because we were talking about doing as much as we can in the States.
Yeah.
Well, that's a great way to do long duration energy storage without having to need to go to Africa or some other place to get nickel or cobalt or whatever it is.
Yeah, exactly. It's a good way to say it.
I also want to talk about resilience from in a what I call a changed climate world.
Okay. Yeah. Because adaptation is what you're referring to.
Adaptation, exactly.
Okay.
Where are the opportunities in adaptation?
Yeah, well, I mentioned the agricultural technology side.
Yes.
I think that's one that's really important. I think transport is one that continues to be really important, right? I mean, certainly that's a way to adapt, and it's not just cars. It's around light-speed rail. It's around electrification of rail. It's around different systems around aviation that I think is really important. And shipping. A lot of people don't mention shipping.
Right.
But shipping is one of the largest emitters in the whole world.
Yes, it is.
Another category we're looking at is cement. So cement is 8% of the world's global emissions right now in terms of cement production. We're doing a lot of work on companies, including some large-scale public companies that are investing really heavily in more efficient ways and less carbon-intensive ways to produce cement. We're under no illusions that cement will go away. It's super cheap. It's super efficient. It's a great material. And there are ways to produce it in a carbon-intensive way that actually are starting to look cost competitive.
And it's also more resilient. And it's also more resilient when the storm comes through.
Well, exactly. And we need that sort of infrastructure,
Absolutely.
obviously. Certainly, we could talk about real estate and resilient builds around that.
Yeah.
But I think cement and focusing on materials like that, especially with the 8% of global emissions side, is something that's really exciting on the adaptation.
And steel production, too. Transitioning from gas-fired to electric arc furnaces is a bigger opportunity as well, too. So, you've got a thought leadership position where you are.
Sure.
Let's take a look at your crystal ball. So where are we going to be 5-10 years from now in the sustainable investing realm?
I really think that 5 to 10 years ago, I'm not sure we're going to be talking about sustainable investing with that label, or impact investing, or SRI, or any of these. Perhaps they still exist as a field, or maybe it's a lens that people think about. I really think we're moving to a world of thematic investing, and it's a grouping of themes that are looking to capture megatrends.
Okay.
And I think many of those will be sustainable because of how we see the world shifting on the environmental and social lines. I just think that's how we're likely to see this play out. I think areas like negative screening and making sure that we're avoiding certain types of companies. Those will still exist, right?
Those aren't
We're
going
always
away.
going to have faith-based clients, people that want to exclude out parts of the market and a do no harm approach. I think ESG integration won't be a term. I think that it'll just be good investing, to your point, and how Europe thinks about it.
Yeah.
But I do think the future of this space, if we're here at US SIF in 10 years, maybe they still call it US SIF, but I think the whole conference will be around thematic investing,
Right.
and around what themes, like some of those we're talking about right now, how they're emerging, because I think a lot of them are sustainable related.
So you're saying we're ahead of the curve.
Yeah, I think so.
I think
I
so.
like to think
I'll-
so.
I'll
It'd be
take that.
boring not to be, right?
So everybody gets the same last question.
Okay. And you did not preview this with me. I don't know what this is.
No, you don't.
No, I really don't.
We never do.
Okay.
So, of course, we're in Washington, D.C. It's June. It's 100 degrees outside.
It is.
Crazy hot.
Very hot.
That wouldn't necessarily be happening without climate change. 9 months or so ago, Asheville gets hit with a hurricane 500 miles inland. Earlier this year, Los Angeles hit with devastating fires, climate related. In light of all this evidence and news, what gives you hope?
Well, I think what gives me hope is the conversations I have every single day with our clients.
Yeah.
There's two segments that give me the most hope. One is next generation.
Mm-hmm.
And when I say next generation, it's not 15-year-olds, 20-year-olds, even 30-year-olds. It's Gen X in many cases. Folks in their mid-40s.
Which is the best generation, I will say, being a Gen X.
Sure.
Yes.
I'm a millennial, so I have that edge on you, I suppose. So millennials are great as well, but Gen X's are the ones that actually have the dollars and are moving it right now.
Yes.
So that's one that gives me a lot of hope, because every time I go and present at a university or I go and present at a conference like this, the rooms are filled
Right.
with folks across those different lines that really passionately care about that. That's number one. The other segment is foundations. Foundations around the country, even in a more pronounced way over the last few months, have been saying, well, look, in the absence perhaps of government support on some areas that we care about as a foundation, how do we use our private pool of capital to affect change? So that's what gives me the most hope. It's those conversations I continue to have every day. And I think both of those 10 years from now, we're certainly going to be seeing even more of that.
Right. Absolutely. Mark Hayes, thank you so much for
Thank
joining
you.
me.
It was fun.
It has been an absolute pleasure.
Likewise.
And I want to remind everybody, please make sure you like this episode. So click on like below. Make sure you follow us on all of your social media platforms. Make sure that you are buying the Sustainable Investor book at sustainableinvestorbook.com. That comes out in October of 25. And just want to say that we're grateful for your attention. I know that you've got a lot of things that are pulling you in different directions. Dollars and Change is so important in that we speak with leaders within the industry like Mark here. So thank you. We'll see you next time. Have a great day.